Alright, so a lot of people ask me how I draw my zones and why my levels work so consistently. So I thought I'm just gonna make a quick video about it. I'm gonna show you how I define my key levels, and I'm also gonna explain to you why they are areas of interest and not just some simple price levels. And I'm also gonna break down how I use auction market theory, time, value, and volume to build a real edge. So let's get into it. So before we talk about zones, there are a few important things you need to understand first. I almost exclusively trade with TPO charts. Everything except execution is based on market profiles. So especially session TPOs, like the one you can see right over here, which only prints the New York sessions. That's very important because I want to see where real participation happens and not some overnight noise. Um, yeah, if you want separate, more detailed video about TPOs, just let me know in the comments and I will gladly do one for you. So before I even look at my intraday levels, I define a higher time frame balance, like long-term fair value and where price is relative to that value. Um, think you can already guess what I mean by that. I'm not gonna eyeball it just for this video right here. You can kind of look at it like support and resistance. For example, we had a range right here. This is the high of the range. So this will be an overall level. Then right down here, we got a gap. Um, so this will be kind of the low of this range right here. So what happened right here? We built overall long-term value. We broke out of it, didn't find new one, and got back into this previous value. Simple AMT, right? So those are two big reference points right now. So when it comes to the intraday key levels, what I'm gonna do is I'm just gonna walk through the last week from Monday to Friday and show you how I would have drawn my levels. This right here, the zone, is the upper part of the value or of the range, or whatever you want to call it, which we discussed earlier. So coming into Monday session, we opened up right here, shooted up, and had some massive excess right on the top. So what I would have done is I would have taken this tail right here and this excess. This would have been one key level. Then later in the session, we rejected strongly down here and created a buying tail. This is also very important key level for me because it shows just that there was some decent buying going on, which pushed price up pretty fast. And on Tuesday's session, nothing really special happened. We just had an inside day. Um, but we formed some excess also down here. So we got a buying tail down here. You could have maybe taken along of this value area low from the prior days New York session. But yeah, this right here is also a very important level. Now, Wednesday, we had something very interesting that happened. So remember this level right here. This was where previously buyers stepped in heavily and pushed price up. So on Wednesday, we broke this level, built it up some new value, so we accepted below this 2-day range. Then we retested this level right here, and no aggressive buying showed up. So this just means that no one is willing to buy at higher prices, so the market will rotate further down. And this is exactly what happened. We built up value, got out of it, and couldn't accept back into this 2-day value which we had right here. Yeah, and that was where you could have taken the market short. So after Wednesday's session closed, look where we built up value, right around here. So an important level will be here, this edge of value, where we retested in the session and broke down, and also this edge of value, where we broke down out of value and also created a low volume node. So those are great reference levels for the next session. So coming into the last session of the week, we opened up right here in the value of the prior session. Then look at what happened in A period. We dropped down, and where did we stop? Right here on the edge of value. Then price got bought back up, and look at where we stopped. Right here at the edge of value from prior day session. It's simple AMT, guys. It's not that hard, right? And yeah, then we struggled a bit right up here, and then we got the complete sell-off the rest of the day. So yeah, that's basically how I define and work with my zones. Zones are not some magical levels, and they are definitely not meant to catch top ticks or bottom ticks. They're simply areas of interest, nothing more and nothing less. And what really matters is how the market behaves once it reaches these areas. And exactly that brings me to the most important point I want you to take away from this video. Zones alone do not give you an edge, okay? You need to combine them with order flow and market context to validate your levels. That's where the real edge is coming from, and not just by looking at simple price charts, simple candlesticks, and guessing some bullshit you can't see, right? Also, the goal of this video was not to give you any sort of shortcut, right? It was to provide a clear framework for thinking about price, value, and structure. Trading doesn't need to be complicated, but it does need to be logical, consistent, and repeatable. Take your piece of the market every day, protect it, and let the time and structure do the rest. If this video helped you understand my process a bit better, make sure to like and subscribe. I will continue sharing exactly how I see the markets. And yeah, thank you for watching, trade safe, and I will see you on the next one.